Canada's critical minerals ambitions, a David versus Goliath battle? Canada, a nation with a rich mining history, is making bold moves to secure its place in the global critical minerals market. But here's the catch: despite its ambitions, Canada's current refining capacity pales in comparison to China's dominance. Can Canada truly become a global player, or will it remain a footnote in the critical minerals story? Canadian Prime Minister Mark Carney recently returned from a high-stakes trip to the United Arab Emirates, UAE, securing a staggering $70 billion investment pledge. This deal, encompassing energy, AI logistics, mining, and other strategic sectors, signals Canada's determination to diversify its economy and reduce reliance on the United States. Frustrated by Donald Trump's tariffs, the Canadian government aims to double non-US exports over the next decade and attract $1 trillion in new investment within 5 years, as outlined in a November 21 press release. But here's where it gets controversial. While Canada boasts significant mineral reserves, its refining capabilities, particularly for critical minerals like lithium and rare earth elements, REs, are currently minimal. China, on the other hand, holds a near monopoly on refining, controlling over 70% of the market for 19 out of 20 key minerals and a staggering 91% for rare earth elements. This dominance gives China immense leverage in global trade, as evidenced by recent export restrictions on minerals crucial for technologies like electric vehicles and renewable energy. Canada's mining prowess is undeniable. It's the world's largest producer of potash and second largest for uranium. However, its production of other critical minerals like cobalt, graphite, lithium, and nickel, while significant, accounts for only 5% of global output. And this is the part most people miss: even with its vast reserves, Canada's refining capacity for these minerals is virtually non-existent, leaving it vulnerable to supply chain disruptions and reliant on foreign processing, primarily China. The Canadian government is taking steps to address this gap. A $1 billion project aims to expand critical minerals processing capacity, creating jobs and securing long-term supplies for energy technologies and advanced manufacturing. Additionally, the 2022 Canadian Critical Minerals Strategy emphasizes securing and diversifying supply chains. However, the road ahead is fraught with challenges. Building a robust refining infrastructure requires massive investments, estimated at $30 billion by 2040 just to meet domestic demand. Foreign investment, while crucial, raises concerns about ownership and control of these strategic resources. For instance, the Tanco mine in Manitoba, a key source of cesium, tantalum, and lithium, is entirely owned by a Chinese company. Canada's efforts are gaining momentum, with initiatives like the G7 Critical Minerals Production Alliance aiming to counter China's dominance. Projects include scaling up a rare earth elements refinery in Ontario and supporting a synthetic graphite plant in St. Thomas. Yet, the scale of the challenge is immense. China's 2024 rare earth production reached 270,000 tons, dwarfing Canada's negligible output. So, can Canada truly challenge China's dominance? The answer remains uncertain. While Canada possesses the resources and ambition, overcoming its refining deficit and securing its place in the global critical minerals market will require sustained investment, strategic partnerships, and a long-term commitment. The world is watching to see if Canada can rise to the challenge and become a major player in this critical sector. What do you think? Can Canada break free from China's grip on critical minerals? Share your thoughts in the comments below.